Hi, good morning, everybody. This is Nicholas Teo from CMC Markets. Just quickly, DBS announced results early this morning before the market opened. DBS Group over here announced very good quarterly results of around 1.12 billion. This against forecast of about 1.07, 1.05 billion. Basically, a 15% improvement from last year's second quarter. Now on all matrices, they managed to beat, and I think what was most impressive was the report that net interest margins actually grew to 1.75%. This also represents the highest that they have achieved where net interest margins were concerned for the last about 13 quarters or so. Again, it highlights to you the strength in DBS's management and the ability to once more execute all the business components within the bank itself to represent actually sustainability and actually profit growth. Now the stock has actually been back down, and it's been back down, down 16 cents as we see down here to 21.21. Let me just pull this chart up. A reason for that perhaps is because we're coming into a risk-off period. Last week we saw global equity markets, especially those from the US, come down and test once more new downside or new short-term downside lows. This is on the back of several things. One, we've got poor indicators coming from China, which highlights the continuing plight of global economy being able to gain some traction on the upside. Two, US corporate earnings thus far has been actually pretty dismal, and in fact I think S&P or several other rating agencies have suggested that as a collective group we may see earnings actually contract in the second quarter by as much as 4%. Now this does not obviously bode well because we are still staring at equity markets down there being up close to their 7-year high or so. Anyway, let's go back to DBS. We see this level that is key. I mean, it broke through the 2120, 2130 level early last week, presumably in anticipation of these numbers or these good numbers. We are seeing that coming back through below that sort of level of 2120, 2130 once more. This move up here, as we flagged, from the low sort of 20 and a half all the way to last week's high of around 21 and a half, was obviously in anticipation of these numbers, which came in as expected pretty good. I think we need to see the stock settle at around here, at least consolidate for a while before pushing through. Ordinarily, if we didn't have the face of the poor numbers in the US or the poor equity numbers in the US and this risk off that we are seeing across Asia today, we may see a little bit more support down here. But anyhow, this stock is trading at around 12-13 times PE, not stretched by any means. And I think execution for the management team will continue to be quite strong. Incidentally though, this stock is trading at its all-time historical high at around these levels. So that's not to say too much, but essentially at 11 times, 12 times PE for a big bank in Singapore, continually being able to execute the way they have, I think it's actually quite impressive. Now, excuse me, let me just shut this. This is what I was flagging earlier. This is the chart of the S&P 500. Now we see, I mean, since late last year we're seeing it coming out on a very gradual basis, and on quite a few occasions across since the first quarter of this year been tested this sort of high once more. All these red lines are critical resistance, if you may, which ultimately becomes support if broken. We saw this big push from the week before, early the week before, all the way up here, only to be met by an equally downswing or downdraft in prices late last week as more and more corporate earnings come out. Again, I think several key things to watch out for. I think corporate earnings will still dominate headlines, but don't forget, late this week, or rather in the middle of this week, we will see a Fed meeting and the results of a Fed meeting. There are 4 more Fed meetings from now till the end of the year, and I mean, if you were to look at some of the wires, I think there are expectations that we may get not 1 but 2 perhaps rate hike of a quarter point, because a lot of or rather the market is pegging for the Fed fund rate to end this year at around the 0.75 to 1%. If that happens, or if that is accurate in any way, then we are probably looking at either one rate hike of half a point, or rather 50 basis point, or two hikes of 0.25% of a point. If that's the case, having two rate hikes across 4 sessions would mean that there is a 50% chance that we may see some movement actually tomorrow, or rather this week, in the movement or in the Fed meeting, rather than September, as what I think most of the people in the markets are now pegging it for. But anyway, that's pure speculation at this point in time. But it's certainly enough to create nervousness in the market in terms of being able to push this S&P or the SPX or the S&P index even to higher ground. I think people are adopting a wait and see attitude. On the other hand though, if we test this yellow line and we break through and can punch through on the downside, we may see all the stops coming in, which could see an accelerated downdraft all the way down to perhaps around the 2000 level down here that I've indicated. So clearly there's no compelling reason to be chasing prices at this point in time, and with regards to the headwinds that may appear in terms of a rate hike, in terms of poorer earnings results, in terms of valuation not extremely cheap at all, and poor corporate results, like I mentioned, and the fact that this stock, this product, or rather the S&P, is close to its 7-year high. I dare say we may see further downside before upside. I mean, besides that, Apple we talked about last week. I think this is just a continuation of what we spoke. We may see this line getting tested, and if so, we may see a pressure further downside again. Just jumping back to Singapore again, this stock that we've highlighted is actually testing this line once more. We could see this thing flip down, and if $8 doesn't hold on here for Keppel Corp, we could see this thing push down even more. Again, it will bring up a lot of the stops in question, especially how we saw results being totally unflattering. Yep. Anyway, thank you very much. Happy trading week.